back half of 2016, really the last 9 months of 2016, brought with it a great deal of volatility in the market. You had a tremendous amount of volatility in commodity prices. You had a lead up into the UK's vote to leave the EU, and of course the surprise results of that vote. And then the lead up into the US presidential elections, and then of course the surprise results from that event as well, led to a tremendous amount of volatility in the markets and in the real asset space over the last 9 months. But against that backdrop, we were able to add value, largely driven by our overweight in energy infrastructure. So energy infrastructure was a space that we were pretty far underweight for most of 2015. We were, coming into 2016, we were pretty far underweight. We closed that underweight and went pretty overweight early on in the year. And that overweight, as well as some stock selection within that sector, really drove a lot of the performance in the back 9 months of 2016. Coming into 2017, we're positioned largely the same way as we were really in the middle of 2016, which is that energy overweight continues. We've moved some weight around within that. We've actually added a Canadian name for the first time in about a year, funded by trimming some of the US names that have done really well in the back half of 2016. We're continuing that overall energy overweight, though, into this year. I think what we saw last year was appreciation of the equity valuations on appreciation of the commodity prices. That second leg to the story, which I think we're going to see in 2017, is the markets coming to grips with the fact that these business models are more stable than they were perceived over the last couple of years. They really are tolling type, long-lived asset, infrastructure type businesses. And that stability in the commodity price is going to lead to a re-rating of those businesses for what we believe they are. So I think that's what's going to give us a lot of confidence in that go-forward positioning and being overweight energy in 2017. Beyond that, we're still continuing to be overweight European utilities, about 10%, and that's balanced with an underweight of US utilities by about 10% as well, depending on how you measure it. As we measure regulated US utilities, we're still about 10% underweight. I think valuations relative to bonds support that underweight, and the equity valuations on some of the European names support that overweight. So we're very excited for what the Trump, President-elect Trump infrastructure plan means for spending in the States. We're going to get details on that over the next coming months. So I think this is a great time to be invested within the real asset space of the market.